Hey everyone, welcome back to Corporate Decoder, the place where we decode corporate filings. Today we are diving into a company that sounds like it should be selling high-performance cars, but is instead trying to fix the human body, so strap in, because some of their recent decisions might leave you feeling a little car sick. We are looking at a Form 8K filing from MUSTANG BIO, filed on February 21, 2025, which tells us about an important decision made by the company. Think of a Form 8K as a company's way of quickly announcing big news to its investors. The most important event in this filing happened on February 19, 2025. This is the date when some major MUSTANG BIO stockholders agreed on something big, and that's what this report is all about. The company we're talking about is MUSTANG BIO, Inc., a company focused on developing cell and gene therapies. These are advanced medical treatments that aim to fight diseases in new ways. The core of this report is about getting permission to issue a lot of new shares of MUSTANG BIO stock. Specifically, it's about issuing up to 5,475,082 shares. This permission was needed to follow the rules of the Nasdaq Stock Exchange, where MUSTANG BIO stock is listed. Issuing this many shares could significantly change the ownership and value of the existing shares. To understand why they need to issue all these new shares, we need to look at two agreements. First, there is an agreement with H.C. Wainwright & Co., who acted as their placement agent, essentially helping them find investors. Then there is a securities purchase agreement with certain investors, dated February 5, 2025. These agreements involve warrants, which are like options that allow the investors and the placement agent to buy shares of MUSTANG BIO's stock in the future. The company needed to issue new shares underlining warrants because the amount of shares they could issue through those warrants was more than 20% of the company's shares. This is where the Nasdaq rule kicks in, requiring them to get stockholder approval before they can proceed with the warrant share issuance. So, how did MUSTANG BIO get the green light to issue all these shares? They got a written consent from their major stockholders. This consent was signed by those holding 131,052 common shares and 250,000 Class A preferred stock. It is worth knowing that each share of common stock gets one vote. The Class A preferred stock, however, has significantly more voting power. Each share of Class A preferred stock gets about 8.4 votes. Because of this higher voting power, the stockholders who signed the written consent controlled about 56% of the total voting power. This was enough to approve the warrant share issuance. Now that the stockholders have approved the share issuance, MUSTANG BIO needs to inform all its stockholders about this decision. They'll do this by filing an information statement called Schedule 14C with the Securities and Exchange Commission, which will then be sent to all the stockholders. To summarize, MUSTANG BIO needed to issue a large number of shares because of previous agreements they had made. To make this happen, they got approval from their biggest stockholders, and now they need to inform everyone else, and this filing is part of that. Now, let's step back and look at what this all means. On one hand, it may be positive for MUSTANG BIO to raise capital through the issuance of shares underlying warrants, as it provides the company with funds to pursue their research and development efforts. On the other hand, issuing so many new shares can dilute the value of existing shares, potentially decreasing the stock price. This dilution effect can be a concern for current stockholders. Also, it is worth noting the involvement of H.C. Wainwright & Co. as placement agent. While securing the placement agent's services allows access to investors, it also means paying fees and underlines their needs for external investors. It makes sense for a company in this sector since developing new therapies is a long and expensive road. The stock price seems to be highly dependent on clinical trial outcomes and regulatory approvals for its therapies. Any setbacks in these areas could negatively impact investor confidence. Based on available information and the current market conditions, a reasonable price range for MUSTANG BIO stock might be between $1.50 and $2.50. This considers both the potential upside from successful drug development and the downside risks associated with dilution and clinical trial uncertainties. In conclusion, while MUSTANG BIO is working on exciting new therapies, there are also challenges and risks that investors need to consider. I'd lean slightly bearish as a lot relies on their pipeline progress. Thanks for watching Corporate Decoder. If you found this video helpful, please subscribe to our channel for more in-depth analysis of corporate filings. See you in the next video.